If you are staring at a screen right now showing silver down $6, sitting at 82.24, and you are feeling that knot in your stomach like the market just turned against you, then you are looking at the wrong screen. Close that chart. Pull up the global energy markets. Look at what is happening in the Strait of Hormuz right now. Look at the burning LNG facilities in Qatar. Look at European natural gas prices that just surged 75% in 2 days. Look at crude oil hitting a 9-month high. Because while Wall Street is feeding you a story about the dollar index and treasury yields causing today's precious metals drop, the physical reality on the ground is that the cost to pull an ounce of silver out of the earth just exploded. And that explosion is about to force physical silver through $100 whether the paper markets like it or not. This is not a crash. This is not a correction. This is the most obvious institutional trap of 2026. And it is happening in real time while Bloomberg talks about the DXY and ignores the fact that Iran is threatening to shut down 20% of the world's oil supply through the Strait of Hormuz. And that drone strikes just took out critical LNG infrastructure in Qatar. The suits want me to tell you this is not financial advice. And they're right, it is not financial advice. It is a map of the physical world colliding with the paper fantasy. And if you do not understand the difference between those two things, you're about to get robbed by people who absolutely do understand it. Let me know in the comments below, because I need to hear from you on this. Do you actually believe that the paper price of silver can stay at $82 while the global cost of energy required to mine it, refine it, and transport it is going absolutely parabolic? Do you believe that when European natural gas is up 75% in 48 hours, and crude oil is spiking to 9-month highs and the Middle East is on the verge of a full regional war that shuts down the Strait of Hormuz, that somehow silver is going to get cheaper? Or do you see exactly what this is, which is Wall Street shaking out retail one more time before the physical reality forces the paper price to reconcile with actual production costs? Drop a comment right now. Tell me if you think this $82 paper price is real, or if you see the massive disconnect between what silver costs on the screen and what it actually costs to produce in a world where energy just went vertical. Now let me break down the actual mechanism of what is happening right now, and I want you to understand that this is not about charts. This is not about technical analysis. This is about physics and thermodynamics and the basic reality that you cannot mine silver without energy. Silver dropped over $6 today. Gold dropped over $96. The official narrative coming out of every mainstream financial outlet is that the US dollar index spiked, treasury yields went up, and that caused a flight out of precious metals. That is the story. Strong dollar, weak commodities, everything is normal. This is just how markets work. And if you do not understand global supply chains, if you do not understand energy markets, if you do not understand how mining actually works, that story might sound reasonable. But that story is a lie. Or at best it is a dangerous oversimplification that ignores the single most important development in commodity markets right now, which is that the Middle East is on fire and the global energy supply is getting choked off as we speak. Here are the facts. Iran has threatened to close the Strait of Hormuz to shipping. This is not a new threat. They've made this threat before. But this time the situation is different because the escalation is real and the infrastructure attacks are happening right now. Iranian drones just struck 2 major facilities in Qatar, Ras Laffan and Said, which are absolutely critical to global LNG production. These facilities supply liquefied natural gas to Europe, to Asia, to markets all over the world. The strikes have halted production, and instantly, 15% of Europe's LNG imports are now threatened. European natural gas prices surged nearly 40% today alone. In 2 days, European gas is up 75%. That is not a normal market move. That is a supply shock. That is what happens when physical infrastructure gets destroyed, and the market realizes that the molecules of natural gas that were supposed to flow from Qatar to Rotterdam are not going to flow anymore. Crude oil just hit $76.50, a 9-month high, and it is going higher because the market is starting to price in the very real possibility that the Strait of Hormuz, which is the choke point for 20% of the world's oil supply, is about to become a war zone. If Iran actually closes that strait, if tankers cannot move through there safely, the global oil market is going to experience a shock that makes the COVID supply chain crisis look like a minor inconvenience. Now let me connect this directly to silver because this is where Wall Street's narrative completely falls apart. Silver is not just a monetary metal. Silver is an industrial metal. Silver mining is one of the most energy-intensive processes on the planet. You have to move massive amounts of rock. You have to crush that rock. You have to use chemicals and electricity to separate the silver from the ore. You have to refine it. You have to transport it. Every single step of that process requires diesel fuel and electricity. When diesel costs go up, when electricity costs go up, the floor price of silver production goes up with it. This is not complicated. This is basic economics. If it costs you more energy to produce an ounce of silver, you are not going to sell that silver for less than your production cost. You are going to demand a higher price, or you're going to shut down your mine. Right now, in February of 2026, we are watching energy prices gap up because of a geopolitical crisis in the Middle East. European natural gas is up 75% in 2 days. Crude oil spiking. And the paper silver market, the futures market, where banks and algorithms trade contracts that will never be physically settled. That market just dropped silver by $6 to $82.24. Do you see the disconnect? The physical cost to produce silver is skyrocketing because energy is skyrocketing, but the paper price is dropping because the dollar index went up a few basis points and some algorithms decided to dump contracts. This is the definition of a mispricing. This is the market handing you an opportunity on a silver platter, literally. And most people are going to miss it because they are watching the wrong screen. Let me explain what is actually happening in the commodities markets right now. When energy prices spike like this, when you see natural gas up 75% in 2 days and oil hitting 9-month highs, that is not a temporary fluctuation. That is a structural shift. Energy is the input cost for everything. Energy is the foundation of the entire industrial economy. When energy gets more expensive, everything that requires energy to produce gets more expensive. Food gets more expensive because farming requires diesel. Manufacturing gets more expensive because factories require electricity. Transportation gets more expensive because trucks and ships and planes require fuel. And mining gets more expensive because you cannot pull metals out of the ground without massive amounts of energy. The paper markets, the futures exchanges where silver is traded, those markets react to currency fluctuations and interest rate changes and short-term sentiment shifts. When the dollar index goes up, commodities priced in dollars tend to go down on paper because it takes fewer dollars to buy the same amount of the commodity. That is the theory. But that theory only works when the underlying cost structure of the commodity stays stable. When the actual physical cost to produce the commodity is exploding because of an energy shock, the paper price becomes completely detached from reality. The paper price is telling you that silver is worth $82 today. The physical reality is telling you that it costs significantly more than $82 worth of energy to mine. Refine, deliver an ounce of silver in a world where European gas is up 75% and oil is spiking, and the Middle East is on the verge of shutting down global shipping lanes. This is what Wall Street does not want you to understand. They want you to look at the dollar index and think that is the whole story. They want you to believe that currency fluctuations are more important than physical supply chain collapse. They want you to sell your physical metal at $82 so they can accumulate it before the energy shock gets fully priced into the physical bullion market. Because here's what is going to happen next. Right now today, you can still buy physical silver from dealers at $82 plus a small premium, maybe $4 to $8 over spot, depending on what product you are buying. But as this energy crisis continues, as European gas stays elevated, as oil continues to climb, as mining companies start shutting down unprofitable operations because their energy costs are too high, the physical premiums are going to explode. Dealers are going to have to pay more to acquire inventory from refiners. Refiners are going to have to pay more to acquire inventory from miners. So miners are going to demand higher prices because their diesel and electricity bills just doubled. And suddenly the physical market is going to be trading at $95 or $100 or $110 while the paper market is still pretending that silver is worth $82. This has happened before. In 2008, during the financial crisis, there was a period where the paper price of silver crashed to $9, but you could not buy physical silver anywhere for less than $15 or $16 because the dealers could not get inventory. The paper market and the physical market completely diverged. The same thing happened in March of 2020 during the COVID panic. Silver dropped to $12 on paper, but try finding a dealer who would sell you an ounce for $12. The premiums were $8 to $10 over spot because the refineries were shut down and the supply chains were broken and nobody wanted to sell their physical metal at the fake paper price. We are about to see that divergence again. Except this time the catalyst is not a financial crisis or a pandemic, it is an energy crisis. And energy is the single most important input cost for silver production. I spend hours every single day tracking global supply chains, reading commodity reports, watching energy markets, cross-referencing shipping data with production data, and I do this because I know that the official narrative is always designed to confuse you and keep you passive while the smart money positions for the next move. If this analysis helps you see through the paper price manipulation, if it helps you understand why today's drop to $82 is actually a gift and not a crisis, then consider hitting that super thanks button below. This channel does not run on ad revenue. It does not run on sponsorships from bullion banks that have a vested interest in suppressing metals prices. It runs on support from people like you who understand that real financial intelligence is worth paying for. Now let me give you the action plan. Because understanding the disconnect between paper and physical is only useful if you know how to exploit it. Wall Street's algorithms just handed you a gift. They crashed the paper price of silver to $82 while the physical cost to produce silver is skyrocketing because of the energy shock. This is a mispricing, and mispricings do not last forever. At some point, the paper market has to reconcile with the physical market, and when that happens, the price is going to gap up violently. Your window to buy physical silver at $82 is closing. Right now, today, you can still go to a dealer and get physical ounces at a reasonable premium over this artificially depressed paper price. But that window is not going to stay open for long. As the energy crisis continues, as European gas stays elevated, as the Strait of Hormuz situation deteriorates, dealers are going to raise their premiums to reflect the actual cost of acquiring inventory in a world where energy is expensive. The premiums are going to go from $5 or $6 over spot to $10 or $15 or $20 over spot, and by the time that happens, the opportunity will be gone. If you have been waiting for a pullback to add to your physical silver position, this is it. This is not a time to panic. This is a time to act. The paper market is giving you $82 silver, while the physical market is about to explode because of energy costs. Use this gift. Go to your dealer. Buy physical ounces. Do not trade paper contracts. Do not play the futures market. Buy the actual metal and take physical possession. Because when this energy shock gets fully priced in, when the premiums explode, when dealers start running out of inventory because nobody wants to sell their physical metal at the fake paper price, you're going to wish you bought at 82. I'm going to be monitoring the situation in the Strait of Hormuz and the European gas markets every single hour this week. This energy shock is far from over. Iran is escalating. Qatar's LNG production is offline. European gas is in crisis mode. Crude oil is spiking. And we are only in the early stages of this. If the Strait of Hormuz actually closes, if tankers stop moving through that choke point, the energy markets are going to go into full panic mode. And the ripple effects through commodities markets are going to be historic. Make sure you are subscribed to this channel with the bell notification turned on, because when these shipping lanes officially freeze, when the next round of infrastructure attacks happens, when oil breaks $80 or $90, I am going to be putting out emergency updates immediately. This is not entertainment. This is not financial commentary for clicks. This is real-time intelligence on the most important supply shock of the decade. And you need to be positioned before the rest of the market figures out what is happening. Here is the bottom line. And I need you to understand this at a fundamental level. The smartest money in the world does not buy paper illusions. The smartest money buys physical reality. Paper silver can be manipulated. Paper silver can be created out of thin air by banks writing contracts. Paper silver can drop $6 in a day because some algorithm decided the dollar index matters more than a Middle East war. But physical silver is real. Physical silver requires energy to produce. Physical silver cannot be printed. Physical silver cannot be created by a central bank or a futures exchange. And when the cost of energy to produce physical silver goes vertical because of a geopolitical crisis, the paper price becomes irrelevant. The physical market will eventually force the paper market to reconcile. And when that reconciliation happens, the people holding physical metal are going to be on the right side of the biggest wealth transfer in commodities history. Right now, in February of 2026, we are at the exact moment where the disconnect between paper and physical is at its maximum. The paper price is $82. The physical cost to produce, considering the energy shock we are experiencing right now, is significantly higher and rising every single day. This gap cannot persist. At some point, mining companies are going to stop selling at $82 because they are losing money at that price. At some point, dealers are going to stop offering reasonable premiums because they cannot acquire inventory at a price that makes sense. At some point, the paper market is going to have to admit that you cannot mine silver profitably when diesel costs have doubled and electricity costs have spiked and the entire global energy supply chain is in crisis mode. I just posted my exact strategy for exploiting this energy silver disconnect to my private community. I broke down the specific physical assets I am buying today. I explained exactly why I'm prioritizing certain products over others. I showed the math on how to calculate the true floor price of silver production based on current energy costs. I gave my timeline for when I expect the physical premiums to explode. If you want to see exactly how I am positioned for this Middle East supply shock, if you want access to the real-time updates I am doing on European gas markets and Strait of Hormuz shipping data, if you want to be part of a community that understands the difference between paper games and physical reality, click the join button below and become an insider member right now. The people who join today are going to have front row seats to the greatest commodities mispricing of the decade. Do not let Wall Street's paper manipulation scare you out of physical silver at $82 while the cost to produce it is going to $100. The smartest money is buying physical reality today. Make sure you're on the right side of this trade. I will see you in the next video when we break down exactly how high this energy shock is going to push the physical silver market.